Good morning, good morning, good morning. You already know that I am Miss Aurorah Dey, and this is the Secured Entrepreneur Movement. You know, the place where the entrepreneur goes from sole proprietor to CEO? Yeah, right here. I want everyone in the Secured Entrepreneur community to like this video, to share this video, to comment below, to subscribe to the YouTube channel if you have not, because this is about to be juicy. In this video, we're talking about the entrepreneur and taxes.
Taxes. It's that time of year again.
Taxes.
We're getting to taxes. They're going to print more money and they're going to raise taxes.
All right, we had to do it. Why? Because I'm reading your emails, okay? And thank you for emailing. Please continue to do so at info@AurorahDayConsulting.com. You all are asking Miss Aurorah so many questions because you've watched the training, Sole Proprietorship is Trash. I thank you so much. And for those of you who have not had the opportunity to view that training or to get on the calendar, the link is going to be below, okay? And I want to thank all of you who have already seen the the Secure Entrepreneur Activation. If you haven't, please go to AurorahDayConsulting.com and make it happen. Get activated, all right? How many of you know that this is Miss Aurorah's second favorite book? TaxFree Wealth. This is the whole motivation behind the Secured Entrepreneur Movement, to create a lasting legacy, to begin to grow tax-free wealth, to create it, okay? This is a book written by Tom Wheelwright. This is my second copy because the first one is just like all marked up, right? So this is my second favorite book because my first favorite book is Rich Dad, Poor Dad. If you've never read Rich Dad, Poor Dad, you haven't listened to the audio on YouTube, please make sure that you do it because it will change your life as an entrepreneur. Okay, now I want to play a clip for you, Tom Wheelwright giving you his credentials before we get into this, okay? Here's Tom Wheelwright.
Well, I started with a bachelor's in accounting from the University of Utah. Then I went and got a master's of professional accounting with an emphasis in tax from the University of Texas in Austin. I spent 7 years with one of the largest CPA firms in the world, Ernst & Young, including 3 years in their national office back when Reagan had his big tax bill. I spent 25 years building and selling CPA firms, spent 14 years as an adjunct professor in the Masters of Tax program at Arizona State University. And as Robert and Kim, the last 10, 12 years, spending a lot of time traveling around the world talking about taxes. So this is my study, is taxes. And
now, what's preventing you from creating tax-free wealth? Well, first of all, you know that Miss Aurorah always tells you that I've made every mistake that you're making right now. I've made every mistake that you're about to make, okay? As it relates to putting everything in your name. Your business is in your name. You're a sole proprietor. Your home is in your name. Your car is in your name. Listen to what Kim Kiyosaki has to say about that.
That's a good point because most people, they have everything in their name. They're proud to have everything in their name. My house is in my name. My cars are in my name. My business is in my name. And as you said, you get sued for anything and they can come after everything.
So
all right, now here's Garrett Sutton, and he's an attorney. I want you to listen to his credentials, and I want you to listen to what he has to say about the reason why you're doing yourself wrong when you have everything in your name. First of all, you need to protect yourself from litigation. You need to protect yourself from unnecessary taxation, okay? But this is how you're going to now build and grow the generational wealth. This is Garrett Sutton.
Across the bay to Hastings Law School in San Francisco, and Kamala was there a couple of years after I was. And, I moved up to Nevada. Nevada's a great place to set up a corporation like Wyoming. And Robert, I think talking about corporations now is very timely because there's going to be a lot more litigation. The courts are just starting to open up, and we're going to see a huge increase in litigation here. So it's time to think about not only having your entity, your corporation and LLC in place, but maintaining it. You've got to maintain it over a period of time to stay protected.
Wait, Garrett, is if you're rich, like you own apartment houses, the reason, you were my Kim and I wake-up call, we had one of our tenants, because we have hundreds of, back then it was only in the hundreds of apartments, one of our tenants knocked on our door. I didn't know who the guy was. He knew who I was.
Yeah, it was scary.
He knew who we were because he just went to the records and he checked in on our property. And he says, I tripped on your sidewalk. I went, oh my God.
So you need protection in that case. If you have real estate in your own name, it's time right now to consider putting it into an LLC. If you operate a business as a sole proprietor, as Robert says, people are looking for enterprises to sue. And if you do that work in your individual name, they can reach everything you own. So it's time right now during this crisis period to get with an attorney and talk about setting up an LLC or a corporation for your protection, because litigation is on the rise.
That's
Still,
a good.
in terms of private litigation, you need a corporation or an LLC, because that for me is the biggest risk. You need insurance as the first line of defense, and then you need these entities as a second line of defense, because again, people are suing all the time.
And it's going trouble.
As a W-2 employee, that your employer typically protects you unless you do wanton and willful acts. But as a small business owner, you're going to be sued personally if you're operating in your individual name. You've got at that point to set up a corporation or an LLC for protection.
Yeah. I see.
Okay, so what Ms. Aurorah is trying to share with the secured entrepreneurs today is that you really must be very, very aware of how it is you are conducting your business, okay? Remember that Ms. Aurorah always tells you that protecting your business starts before you open for business. So you're hearing Tom Wheelwright and you're hearing Garrett Sutton tell us that you need your legal entities in place, okay? And you know Ms. Aurorah is the trust goddess. you know what? I'm gonna put a clip in giving you the secured entrepreneur quadrant, okay? Because that is the catalyst behind the movement, as I'm telling you, and the whole rich dad philosophy, okay? With the rich dad quadrant is the motivation behind the secured entrepreneur quadrant. So take a look at that. All right, so this is the first illustration that Mr. Word wants to share with you in this training. Now, this is where most of us are. We're trying to get here, secured entrepreneur, okay? So many of us are here, sole proprietor. You could be operating as a DBA, which most of you are operating as DBAs, and then a majority of you are operating as a single member LLC. All of this is dangerous, and I'm going to tell you why. And then you've got a large percentage of us are here, cash flowing entrepreneur, but you're still a sole proprietor because you're still a single member LLC, okay? You're still making some mistakes that is costing you a lot of money, okay? And then here is the CEO, where you actually have a business and you have employees, but you may have employees 500 or less employees. That's who I'm talking to. I'm not talking to people 500 or more. I'm talking to people 500 or less here in the CEO position, and then down here in the secured entrepreneur position. Okay, this is where we want to be. All right, so here's what I'm going to point out to you in this training: that as the sole proprietor here, you're operating as a DBA or a single member LLC, you're still filing a 1040, and your tax bracket is at 60%. You're paying 60% taxation no matter how it shakes out. Why? Because in this new administration, okay, there's a 28% decrease as relates to the things that you were able to deduct in the past. There's a 28% cap on the deductions, okay? So whatever you thought you were doing before, you're not going to be able to do it within the new administration, okay? And so you're filing a 1040, you're claiming that you are self-employed, well, you're paying 16% self-employment tax, okay? So whatever it is that this is also 400,000 or less right here. You're claiming less than $400,000 for the year, okay? You're at the 60% tax bracket. This is a no, all the way to the no, okay? Cash flowing entrepreneur, this is the red dot, okay? Because what's happening is that you are making money. And oh my goodness, 400K and above, you're being taxed. You're being all the way taxed. You're at 40% right here. 37.5 in the new administration. Okay, and many of you are still gonna be at the 60% once again because of the 28% cap But if you're claiming that you made more than $400,000 for the year, you are really cut off from all of the deductions that you were able to get previously. Okay? This is why it's so important to understand the tax code, the tax law right now, all right, as you are conducting your business. But don't worry, Mr. Aurorah is going to help you with all of that, okay? So if you're here, if you're cash flowing here, just know that you are in the 40%, okay, tax bracket, 37.5 to 40% tax bracket, and it gets worse at 400K and above because you're still suffering that 28% cap on deductions, okay? Now, when you're here as the CEO, now if you are organized as a corporation, in the new administration, you're going back up to 38% tax. You're going back up to 38%. Right now, we're at 20%. Now, if you are not organized as a corporation and you are organized as an LLC, the correct way, you can still take advantage of the 20%, okay? You can still take advantage of the 20% because you're moving in an arena where you're now going to have the benefit of every tax deferral strategy known to man. Okay? All right? So this is the endeavor to come over here to CEO and secure entrepreneur land because this is 0% tax. Zero. Okay, because this is where you're going to now have your joint venture opportunities. This is where you're going to now make your investments. And when you make those investments, because now you're legally structured the proper way, you're not claiming ownership over any income. These entities have ownership of all the monies that come in, and then you're passing them through to another entity that is also tax exempt. So this is the area that you want to be in, okay? So that's the first thing. Let's get into how it is you're utilizing your legal entity to legally avoid taxation.
You know, about 50% of the tax benefits you get if you're a business owner or an investor come from the type of entity you use. So whether it's an LLC, and different entities are used for different purposes. I mean, we use a different entity for real estate than we use for a business. You know, some people want to be a corporation, some people want to be an LLC, some people want to be a limited partnership, but these all work together. This is why I think the major qualification is education, right? Because if you don't understand how these work together, Garrett and I have seen advisors, talk about getting better advisors, Kim. Garrett and I know you remember this, Garrett. We remember advisors coming and suggesting these entities for people, and we're going, this looks like malpractice to us. I mean, this is just, this is going to raise your taxes and not going to give you the asset protection. And so you really have to have the advisors working together, and you need to know what you're doing as well.
Yeah.
Advisors need to be qualified, because for Robert and I, when we started out, we didn't have an accountant, we didn't have an attorney. And then as we got more and more sophisticated, we needed higher levels of accountants and attorneys. So as you get more sophisticated, you get more knowledgeable, your advisors have to be more knowledgeable as well.
And the reason that the S quadrant has such a high tax rate is because those people don't use entities the way Garrett's talking about. So this is why, like you're talking about, Kim, Garrett and I talk because the entities for the legal side have an impact on the tax side. And so if you're in the S quadrant and you don't have an entity, you're going to pay the highest tax possible. If you do, you can have the same tax rate as the big business. You have to qualify by getting the education and the advisors.
Yeah.
I mean, the biggest incentives right now are still real estate, okay, and business and real estate are the two big incentives. What's coming down the road is the Green New Deal, the clean energy, all of that stuff.
I love her.
Those are all going to come via tax credits, tax incentives. We already have an extension. For example, if you put in charging stations, you get a tax credit. If you put on solar panels, you get tax credits. There's lots of energy tax benefits. I agree
that all we're talking about are incentives. The government incentivizes people to set up corporations and LLCs. Every state has an LLC law. You'll talk to some people and say, well, I don't think I should use an LLC. That's like hiding assets. No, it's not. It's protecting yourself. Every state allows for it. They don't teach you.
Garrett, aren't there some states that are better than others too?
Yes, there are.
Yes.
Nevada, Wyoming, and Delaware compete to be the best states.
Because they want business owners in their states, right?
Well, they collect the fees. So, it's a good source of income for those three states. But all states offer these incentives to protect yourself, because governments know, they're not going to teach you this in school, but they know that business people need to be protected when they're taking risk. And so there's nothing improper about it. You just have to know how to use it.
But you also have to know where not to incorporate. I mean, we personally knew early on we were not going to incorporate in California because of all the taxes.
That's right.
Right? Is that right?
Yeah. So my son just started a business. He lives in Oakland, California, and he's like railing against California. I can't believe they tax me just because I'm here. I didn't even make any money and they tax me. I'm going, that is California. They tax wherever they possibly can. They go after people that I think legitimately they have no business taxing, and they'll still tax them. So yeah, there are good states. I mean, there are actually a lot of good states, not just Nevada, Wyoming. I mean, Florida doesn't have a personal income tax. Texas doesn't have an income tax. Arizona has actually good entity laws. Their income tax seems to be going up, but they have good entity laws. So it really does make a difference where you set up that entity.
Yeah,
and you don't have to live where you set up your entity.
You don't. Now you'll still be. You still may have to. Garrett can talk about registering to do business. You'll still be taxed on your income that you earn in that state. Correct. Okay, unless for example it's like income from interest and dividends that you can actually get out of a state even though you live in the state. So it's actually possible to. State taxes is something people don't talk about, but they're becoming more and more important as the states continue to do a money grab for tax revenue.
And the teachers don't know what's going to happen to them tax-wise.
Well, again, unless they set up that corporation, LLC, they're going to get hammered. The good news is, to your point, Kim, there are incentives there. And the small business can also be at that 20% tax rate. You can do that. You can actually be at 20% while you own your company and 0 when you sell it. So there are lots of incentives for the business owners and the small business as well. It's just that very few small businesses actually understand that or have advisors that understand it.
Pay attention to the carbon tax. We're going to be talking about that this week. And Ms. Aurorah has already made 2 videos talking about the green energy, and this is where we're going. And we've talked about the stocks that are going to be like thebomb.com for us moving forward as we're going into the green energy phase.
Because we have a new tax coming on that's going to make the rich even richer. It's called a carbon tax. It's the Green New Deal. And the average person goes, hey, what's that? What's a carbon tax? Now, it's going to make, for most people, poorer. But it'll make certain people richer.
And just to your point, I think people misunderstand. It's not that you can't do it here. You can't do it if you're an employee. And so they don't understand, well, how come I can't get a tax break? Well, because you're an employee. These are only for the...
Actually, they could, but they'd have to do something different.
They could be an employee, start a part-time business,
correct,
and then they could get some benefits.
Right. They're not understanding it. These are for businesses and investors.
All right, now, if in fact you know that entrepreneurship is your path to wealth building, please get on to Miss Aurorah's calendar. The link is going to be below. And once again, you can find Miss Aurorah at AurorahDayConsulting.com. And until next time, ta-ta.